trading. Welcome to live trading Bitcoin, the London session. This morning, or actually last night, I took a position. Let me pull up my pen here. And we'll go over what I was seeing here on my charts that triggered this trade idea. So this trade idea is off of the daily. These orange lines that you see here, these are reaction levels off of the monthly and the weekly. These are swing highs and swing lows on the monthly and weekly, and these are also highs and lows of monthly and weekly candles. I use this to frame my daily chart, and with this, looking for potential trade signals here. This is a Fibonacci retracement tool right here. I'll remove it for now so we can get a closer look at the price action. But what I'm seeing here is this purple line that you're seeing here and here. This is the structural range on the daily chart. So this is currently the structural strong low. This is structurally the weak high. And what I saw here was previously this was the strong high and this was the weak low. And then this candle here creates a market structure shift here. This creates a market structure shift when this level is closed above here in this candle. So when I get a market structure shift or a break of structure, I then start looking for a swing high or a swing low to form after this. And then we can see right here in this area, we get a swing high. So if I pull the numbers up, this candle will be the high here. This is 110,643.9. It is higher than the candle, the previous candle, which is here, and the following candle is here. So we have candle 1, let's call it candle 1 here, candle 2 here, and candle 3 here, with this being the swing high. So now that there's a swing high in place, I would take it short here. But I was not trading this system at the time where this came in. So since I just started trading with this system, I noticed that I missed this trade in yesterday's price action. This is yesterday's candle right here. Yesterday's price action came up into this area, and if I pull the Fibonacci tool back up here and zoom in, this level here where this blue line is serves as equilibrium, and that level currently is 106.6289. So this level here serves as equilibrium, and any pricing that is above this level is considered premium in value, and any prices that are below this level are considered discount in value. Discount. So here you want to buy down here in discount to go long. You want to sell ideally in premium to go short. So in order to go short, looking for premium to be offered, and we can see here from the start of the price action, which would have been here, premium was offered up until here. Now discount is being offered. Now here, premium is being reoffered. So for me, I took this short here, and then my target is down here. Same target if I would have been able to enter here. It is simply the I target the next level of liquidity in whatever direction that I'm trading. So in this candle here, which would have been the entry candle, this would have been the nearest liquidity level here on the daily, and now entering here, it is still the same level of liquidity, and my stop loss is here. So I'll pull up my ticket here, and we can see this is the stop loss right here, and the stop loss is 108,900.1, and I believe this is, or there is a 10-cent spread on Bitcoin, so I gave it 20 cents with this candle that I put my stop behind is 108,899.9. So 20 cents for the 10-cent spread or 20-cent stop, and my target is down here, which is 100,305.1, which corresponds with the low of this candle right here. But this is the current trade that I have on, that I took shortly after the crypto market open, and now just going to allow this position to work itself out one way or the other. Currently right now here in the London session, just looking for a potential trade opportunity. One is all that I'm looking for here on the 15-minute. And these lines that you see here, orange and yellow, there's all of the orange lines are weekly, monthly, daily, and 4-hour swing highs and lows. And the yellow lines that you're seeing are daily level, so daily highs and daily lows. But I could also have these the same color. When I go back and do this again, they'll all be the same color, simply because I've noticed that there's no differential in reaction levels between the daily highs and the swing points from the monthly down to the 4-hour. These purple lines that you see here are represent the structural range. So currently right here, this candle set the structural strong high that's holding currently, and then this candle here created the current week low. This candle here is the start of today's crypto. Today's crypto market was started with this candle here, and then the strong low the current week low was put in immediately after this candle. So if there's continuation, there would be a break of structure here, and that could potentially allow for an intraday entry during the London session here. So I'll keep an eye on this, and if a break of structure or a market structure shift occurs to the long side, either one, I'll be looking for any potential trade opportunities. But this is what I'm seeing so far. And then based on my current position, I'm definitely short biased currently. We can see quite a big sell-off here yesterday after the close. I believe this would signal the close of the New York session right here. We can see just further consolidation and then a leg down or 2 legs down. And this is yesterday's price action here, and I was able to take a position here. But now we'll just sit tight, allow the session to play out. Right now, this is Frankfurt. This is the open in Frankfurt currently, and in about less than 32 minutes, we'll have the open in London, and that's what I've been trying to position myself for. So currently back in the green here on this trade off the daily. If we have a look here on the 15-minute at the position, we can see the first leg of the sell-off yesterday, which is preceded by this candle that wicks out the high of this candle. So there's a sweep on liquidity right before this sell-off here. Pull back to test this level here. Continuation, reaction here at this level. And then we get a reaction here at this level. Price sells back in down into this level here, retraces, reaction, retest, reaction here while this is consolidating here, and then we get this sell-off here. So currently, structurally, here on the 15-minute, Bitcoin is in a downtrend. Here on the 4-hour chart, Bitcoin is in an uptrend. And here on the daily chart, Bitcoin is in an uptrend. I have this uptrend on the daily actually failing, starting from the trade signal that I saw here after the market structure shift. So even though it is currently trading long, or the structural range is along, from my systems technical perspective, it's actually weak right now. So it is apexed here. And then with the 4-hour, again, and this signal would have been early, as in this signal was the preliminary signal for weakness here in the daily. So basically my system will anticipate, or I wouldn't even say anticipate, this is simply just responding to the data that is presented. And now selling has resumed on these, on the previous candle and in this current candle. So ideally, this will sell down into the structural weak low, and if all goes well, we'll sell through and close below here on the 15-minute. and that would put this current trade in a better position, and potentially having it structurally down into the next area of price action. And then that would also signal the potential for a trade inside the London session. But if there is a break of structure here for continuation, for further selling, I would want to look for a swing high to take place after that break of structure, a swing high to take place at one of these reactionary levels. And I call these reactionary levels and not support and resistance levels, just because my use of these or my use of levels is based off of let's say the pricing or market maker algorithm that controls the price in the currency pair. I know that a lot of retail traders subscribe to the idea of support and resistance from a let's say a traditional retail perspective. Just my personal experience and the way that I trade, and what I understand about markets, which is certainly not everything, but I am aware that financial instruments are mostly managed by algorithms. And the algorithm is going to respond how the algorithm is programmed to respond. In addition to that, I would say as a or the concept of retail, there's not enough resources, or even if there were, or let's take institutional traders for example. A lot of or let's say institutions like banks or private equity funds or different types of things, hedge funds, these types of things, they do have the size in order to let's say influence the market that they trade in. But with that in mind, no movement is going to happen without the market maker and or the market maker algorithm deciding where price goes. So as retail traders, we can do whatever we like. Large institutions can do whatever they like, but nothing moves unless the market maker decides that it moves. So first and foremost, for my trading system, I recognize that the market maker is the one who decides when, if, and how something is going to move, and influence rests with the larger institutions. They can influence what the market maker decides to do. As retail traders, we do not, or we certainly lack, even collectively lack the size to compete with the larger institutions. But the market maker and the algorithm are aware of our presence and seek us out on a daily basis because of the awareness of where stop orders are likely to be placed, and also price action is engineered in a way to generate liquidity. So with these things in mind, I subscribe to the concept of reactionary levels more so than support and resistance, because it is the algorithm that is responding at these prices more so than I would say someone is, or there's a institution defending or a level or something like that, or supporting a level. And then right now, where this current week low is, there are going to be sell stops just below here. So there's going to be some sell side liquidity below this week low that I would imagine the algorithm is going to want to target here. And same thing here for my trade on the daily chart. The idea is that there is sell side liquidity located down here, and my trade idea is to tap into that liquidity, as I believe that the algorithm would do so. So that's my trade idea here based on liquidity. And if an opportunity comes to take an intraday trade here during the London session, same thing, I will target the nearest liquidity. And the nearest liquidity, if that range is entered into, would be here, and then possibly here. But I would target the nearest first. So let's see what the difference is. And it's just going to also take into consideration on where the price action ends after the potential break in structure. So the low here is 106.068. And if there's a break in structure, my assumption is it'll take place down in this area, or this gap in between levels here. This area, and I would anticipate price action to pull back into this area here to potentially set up a swing high, and then would look for a sell opportunity and either target again these two areas here, one where the low is 105.622. So 105.622. So that's pretty close, as I notice here, but for me it won't matter. I mean, I'm just going to target the closest one and just get on with it. And the next level down is 104.920, which to me looks a bit more appealing, but sticking to my system, I just want to target the next level of liquidity. So depending on where price action sets up, that will either be here or here, but I'm going to assume currently that it is more likely going to be this area here that's going to be targeted, or at least the liquidity, the sell side liquidity that's going to be located down here. So currently price is consolidating. As I mentioned, the pullback shortly after I entered here, and then this consolidation. Now we're starting to get some selling, some pullback here. But there's going to be some sell side liquidity resting here as well. So I believe that this price action here is set to make a run on this liquidity before making a run here on this sell side liquidity here. So looking at two levels of liquidity inside, or at least one level of liquidity here inside of the range which the rest of the liquidity will reside down here. So this being the internal range liquidity here. just wait for a potential opportunity. Seems like here in Frankfurt things are opening up on the slower side, but yesterday was quite a big day as far as it moving. Seems that we've given back yesterday's gains in the overnight, and there's quite a large range that's been put in currently. So typically, or I know I look more forward to seeing smaller or more narrow ranges, just because the likelihood of there being a market structure shift or break of structure would be pretty imminent, and also likely to occur earlier in the session, where with this current market structure here on the 15-minute, the range is rather large, so it would likely take some time for there to be any type of change in structure that would give me any potential trade entry signals. As you can see here on the daily chart, where this trade would have been initiated, had I seen it on time, I would have had to survive this pullback back to break even after being in this trade for a few days, just because the target being a run on liquidity on the sell side of liquidity located down here, with this large range, it being difficult for the algorithm to deliver price directly here, so needing to pull back before reaching the target here. And now we're in a new 15-minute candle and starting to get continuation here to the sell side. And it seems that here in this Frankfurt session, or at least the last 15 minutes, we may get a test of the liquidity down here. This internal liquidity here to the sell side on the 15-minute. So far our price is reacting as my system has, or as I have in, let's say, interpreting the information that I read through the lens of my system. Take 100 traders, show them the same chart, same price action, and chances are you'll get 100 different variations of what is happening. So just understanding that what I'm seeing through the bias of how I trade and how my psychology works individually. But so far, my system is showing me what I would believe would be the correct order flow for the current price action. Which is helpful when you're trading. And we're still selling. And now starting to get some speed in price action, coming in and testing one of the reactionary levels and having a reaction off of it. And this is the last reactionary level that I have before there is a gap in levels here. So there could be little resistance in the algorithm's ability to deliver price in between these two areas of liquidity here. Should price action be able to move below this current reactionary level. So where there's sell side liquidity resting here and here. And if I can be patient and hold for target, and well, if all goes well and target is reached, also if at all possible, being able to take intraday positions on the way to the target. I find psychologically when it comes to things like over trading, if I have longer positions, like for example, taking a position for the week, or let's say taking a position for the week, it keeps me out of trades, or the urge to take a position, or feeling like I'm being unproductive, things of that nature. Having a longer position psychologically helps me because I'm engaged with the market, but I'm not, let's say, trying to force anything, but it gives me the ability to take advantage of some of the larger moves without, let's say, the pressure that can come with some intraday positions. So I find that there are pressure in all positions, but how they're managed. So I can say from a psychological perspective, taking short-term or swing type of positions come with their own, let's say, stresses or stressors, no different than intraday. It just happens at a much slower pace. But I find that from a psychological perspective and potentially from a monetary perspective, slowing things down can be helpful. Just overall, not feeling the pressure to have to do something. Like for example, right now that I'm currently in a position, and the fact that the position is green, however slightly, from a psychological perspective, I don't feel pressed in order to make a trade. So to me, that is a good thing if I don't feel like I have to trade. So having these longer term positions on for a week or so ideally allows me to trade using my system, but doesn't psychologically put me in a position where I feel like I have to make something happen every day. So to me, psychologically, that offers some relief. It also helps me to use caution in my intraday trading, from the sense of I don't want to mess up the work that I'm doing long term. And I would say the only interesting thing, or one of the interesting things about that would be to, as far as in like trading against yourself, Like for example, if I were in this short position here on the daily from where the short initiated here, I would have been waiting 1, 2, 3, and then this would have been Monday, Tuesday. So I would have been able to take an entry on Wednesday at the open, so waiting at the crypto open. So that'd be waiting all day on Wednesday, waiting all day on Thursday. This was put in on Friday, and then this being the weekend where you get pullback and consolidation. Monday, you get the main pullback, and then today being Tuesday, showing indecision, but selling away from the highs here on the daily chart. So being 1, 2, 3, 4, 5, 6, 7. So already a week would have been placed into this position, but now currently this being the first day of the position when catching it late, but just recognizing that the trade would have been going in my direction, and any intraday trades would have likely been in that direction. And then while the trade starts to come back against me, and also or as the trade comes back, pull back, or as the trade pulls back, this price action, like yesterday, being long. So yesterday was basically, since I wasn't in it, I traded it long intraday, and then here on the daily, taking it short. So just recognizing that there can be some divergence in what I'm doing as the internal price action on the smaller time frames interacts with the price action. Well, I wouldn't say interacts. The better word would be, or not the better word, the better terminology would likely be as the internal price action on these smaller scales is taking place may differ from your overall higher time frame perspectives. The main thing is that the smaller time frames or the lower time frames play into the higher time frames. So just recognizing there may be times where it may appear that you are trading against yourself, and times you actually may be, but your trade idea may still be valid on higher time frames. You're just trading the internal structure or internal range of the higher time frames. So less than 4 minutes until the London Open. It'll be interesting to see if price action presents a breakup structure opportunity. With this wide range being put in, I don't know how likely it would be, but since I don't know, I'm here just in case. So still have some pullback from that reactionary level that was contacted during this 15-minute period. Also currently trading inside this candle. It seems to be doing some consolidation on a smaller time frame than the 15-minute here at this reactionary level that is currently at, that is near 106.753. here, we may be selling away from that reactionary level, selling back into the previous reactionary level that sent this candle into pullback. So it seems like it may want to retest this candle or retest this reactionary level coming into the close of this 15-minute candle. Or it could be potentially setting up for further selling or potentially buying at the close of this candle. So the level that is below the current level here definitely is having a reaction on price currently. So if price is able to trade below it, we may get some speed in the price action. But this is since the initial sell-off here, this is the only breach of this reactionary level here. So without the initiating momentum here on this pullback here, Bitcoin not being able to test this week low here. And less than 1 minute until the London Open. We're getting deeper pullback on this candle. And London is now open. It seems there is some indecision in price here at the London Open. What seems to be just a little bit of selling here coming into the London Open, but it seems like mostly things are consolidating right now or not really moving at all. So after yesterday's rally, there may be what may be perceived as exhaustion in the price action here in Bitcoin currently. And this may still be pulled back from this reactionary level here. But getting some buying here that's taking place. But I would still view this overall, this candle, this open, being consolidation. And is forming an inside candle currently, looking like a very, very, very small doji that is resting on the reactionary level here. So looking like a slow start to the London session, which is much different than the start of the New York session yesterday. Normally, I don't tend to, let's say, equate the magnitude of volatility as I feel that I should or that I see that other market participants do. But yesterday, certainly for the first time, and maybe it's just the way that my system responds, but I could definitely tell that there was volatility in the market at that time. And then in comparison to this, recognizing that my system is showing me that currently in this 15-minute candle that there is little to no volatility currently in the London session. Now that could change at any second, but currently showing no volatility here at the London Open. Just showing consolidation in a very tight range, I imagine, here on a smaller time frame. So indecision here on Bitcoin as price is resting on a reactionary level. Still consolidating. But ever since the open of the crypto market today, it's definitely been bullish. But we can see here starting to lose some steam here coming into this area. And it looks like we may be doing a little bit of selling here. And potentially testing that reactionary level that it's resting on. So yesterday was the first day that I employed the modifications to my system that I'm using now with these reactionary levels. And typically, as soon as I start, or if I make an adjustment to my trading system, and I'll back test it. Usually I'll find the back test results or the back testing results to be fairly decent, probably 50% or higher, ideally. And then as soon as I begin trading based on that modification to my system, immediately it does not work. It could have been working for a week or two prior, and then as soon as I try it, no, not happening. But yesterday was the first time where I employed the change in the system, and it actually just worked out. So definitely experiencing, let's say, the psychological effects of having a system that, let's say, is a higher probability than not, than occurring. So I'm interested to see once I get some numbers in, how the probabilities shape up. And still getting consolidation here at this area, starting to get some buying and testing the high of this 15-minute candle. And we're about halfway through this candle. Looks like a new high has been put in here in London, at least for this candle. And this could be Bitcoin going higher. It could be Bitcoin testing the highs, maybe trying to seek out more sellers for a potential leg lower. Many things that could be happening here that the algorithm could be directing price for one reason or another. So with this type of range, just in case here in this London session, this range is, or in case this range is a bit large in the London session, in order to trade out of, there's quite a bit of economic data planned to be released during the U.S. Open or in the U.S. pre-market. So the volatility engineered from those data releases could be the catalyst necessary to free Bitcoin from the current range that it's trading in. And now we have Bitcoin testing the lows of the candle. It's interesting how price action, or at least having the desire to see price action, let's say, continue and also increase in speed with the London Open, but getting quite the opposite here. And it seems like the Frankfurt Open offered the price action I was looking for more so than London has, but it is still just the first 10 minutes of the London session, so plenty of time left to go. I know psychologically I like to do things yesterday, so a good time to use this opportunity to allow patience to happen. And not get in the way of patience and let it happen is what I want to do in situations like this. Also being grateful for the fact that I do get to trade. A lot of people would like to, but don't get the opportunity to, or don't get the opportunity to for long. And also the fact that I am in a position currently and it is green, however so slightly. So while I am allowing patience to happen, doing my best to look around and see things that will help me be patient. Also knowing that the New York session is coming up, so wanting to preserve my psychological capital just as much as my financial capital. And this goes for every session. When the New York session hits, I'm going to want to be aware that my session for the daily will be coming up, and then the London session, or Frankfurt London, will be coming up. So having three sessions a day, two intraday sessions, and one daily session where I can take advantage of whatever the market offers. And now, here in the last 5 minutes of this opening 15-minute candle, we're getting selling here in London. We're back to testing that previous reactionary level. 106.642 is the low in the current candle. 106.657 is the low in this candle. So near a new 15-minute low. And still approaching a new 15-minute low, and now a new 15-minute low has occurred here. So wait 14 minutes and then something will happen. So again, a new 15-minute low, and this is why we do our best to allow patience to happen to us. I'm not sure how you force patience, which is why I'm phrasing it the way that I do. No different than the fact that I cannot force a win out of any financial market. I just have to be in the correct position based on price action in order to have a win. It's not something that I can generate or manipulate or anything like that. The only thing that I would be able to manipulate would be my own psychology and my own, let's say, physical actions or interactions with the marketplace. Now let's see, the new low is 106.6398. And let's see if there is any follow through on this current candle. So now we're price action is resting at that reactionary level that we just saw pull back from the Frankfurt Open into the London Open. And now we're back to testing that level. We can see here getting a reaction off of that level in the form of pullback. And we'll see how much consolidation or pullback will occur in this area before price action decides what it wants to do next. But since the previous candle sold lower than the candle before it, there's a probability, I would say the probability would be higher for continuation than for reversal, but that could be invalid due to the fact that it's been putting in a series of lower highs and lower lows here. So the fact that there's going to be a limit to continuation to some degree before you would reasonably expect there to be pullback. But there's also these reactionary levels that can serve as blocks or let's say defensive positions, or just I would say that conform to the retail idea of support and resistance. So we can see here difficulty being able to trade above this area once price action sold below. You can see the same thing here. See the same thing here. It doesn't mean that these levels are going to hold indefinitely. Just means that based on the current price action, this is what's happening. So this level here, you can see there's been no test here. This level here, there's been no test here. But if we look at yesterday over here, we can see it's putting in a very similar pattern here as it does here. But you can see that this level here is violated with this price action. So there's no guarantee. So this price action here is still good. This price action here is still good. This price action here is negated by this price action here. So just because price action is doing something that resembles, let's say, traditional support and resistance, doesn't mean that that level or those levels are going to hold as support and resistance, as evidenced by these two areas here. And now this 15-minute candle may be preparing to test the previous 15-minute candle low after that pullback. The algorithm may have been trying to collect more sellers, or just may be having some difficulty selling through this level currently, much like the previous 15-minute candle took some time to sell through that level. But the I can say the overall sentiment in the market since the Frankfurt Open has been selling. $106.6398, the current low here in the session. And now we have a new 15-minute low, and price action is trading below that reactionary level that has price action has been trading off of since Frankfurt. We're getting some continuation in this selling, and it looks like we are poised for a test of this sell side liquidity here, and that level is 106.5152. So we'll have to do some selling to get there, but certainly headed there now, it seems. Since there is price action wise, there is nothing between the current price and that price. You can see selling, we're now approaching that area for a test, getting some pullback as selling is occurring down here. This level is 106.5152. It's very similar to this level here. Which comes in at 106.4466. Okay. 5152 is the next level of interest that we want to see reached. That will target sell side liquidity. Still getting pullback from testing that area, or at least I believe the price action got down to 525 before 528. So I would assume that price action is pulling back for a deeper retest for that 515.2 level. And we'll stand by to see if we get a new 15-minute low in this candle below the 528 level, or 528.4. And it seems like the price action and volatility here for the London session have certainly picked up after that first 15-minute candle, or I'd say probably the first 13, 14 minutes of the London Open. That last minute put in the majority of the price action on the previous candle. But I would say overall, for the current term short bias, I can say that the price action is moving along well to support short bias this morning. Seems to be a bit of selling coming in here. Potentially a retest of the low, and now a new 15-minute low has been put in. Now it seems like there's going to be a test of that area of liquidity. Some retracement. So the new low of this 15-minute candle is 106.5226. So it seems that this morning Bitcoin is selling off, pulling back, selling off, pulling back. So some consolidation, but overall selling. And to me, this price action here on the 15-minute looks pretty clean. Now we're seeing some pullback. Less than 3 minutes to go in this candle. price action seems to be consolidating here. It's interesting, at least with the price action here in this session, just spending more time consolidating than selling off, but certainly selling off. This is the type of price action where if you want to go short, if you do not have a system in place to protect yourself, you could find your account and your psychology dwindling away. And it seems like we're set for another retest of the low of this candle and potentially the sell side liquidity. That's located under this candle here. And 5152, we're at 5157, so less than $1 away. And now we've tapped into that liquidity, 106.5026. Getting some speed and price action. So to me, in addition to that, this would be structurally or internal structure. This would be an intermediate term low right here, with this being intermediate term high here. So looking at this here for the range, and then now closing below this intermediate term high, to me that's a sign of weakness here. And seeing all of this as displacement here. So there's the possibility of this price action being institutionally sponsored, but we'll keep observing to see what price action does. So right now, price action pulling back, it seems to test that level. Pulling back to test this 515, I think this 515 level here. So with nothing reactionary that I have in the charts here, ideally I want to see more speed in this area, just like we're getting speed to the long side here. I'd want to see speed to the short side if at all possible. But with the price action on London today, it seems to be spending quite a bit of time consolidating, and then maybe, and this is just rough numbers or bro science, but let's say 80% of the time consolidating, and maybe 20% of the time let's say trading directionally. But when it does trade directionally, it trades clean, even though right now this is pullback and trading in the opposite direction of the trade. And I was mentioning coming back to test this level, but it seems more so to come back to test this reactionary level here. And Bitcoin is currently testing that reactionary level right now. And if all goes well, that reaction will send price action selling again. But the fact with this with this amount of displacement, only having this one area of pullback here, this would be expected. at the very least. And there seems to be some reaction off of that level. We'll see if the reaction can be sustained by seeing a continuation in selling away from that level. Okay, now we're starting to see continuation in that reaction. Still seeing continuation. And 5 minutes into this candle, and seeing continuation from the reactionary level. Bitcoin still trading away from that level, and now getting some retracement. Seems that Bitcoin also reacted off of the 106,500 level, which is sending price action back into that reactionary level. And now Bitcoin is back at that reactionary level, testing it again. And there's been some selling away from that level here after the retest, but I would not call it reactionary exactly. And now we're back up to test this level again. Slight reaction. Getting some selling. So it seems Bitcoin is consolidating here around this 106,600 level, but still seems to be selling away from that reactionary level. Again, consolidating here at the 106,600 level. calling it the 106,600 level, even though it's above and below it, just because that is the, let's say, the whole number in that area. Now, Bitcoin may be selling away from that area if there's continuation here from the 106,582 level, and price is stepping back up. So maybe it is still consolidating here around the 106,600 level. And selling away. So it seems like Bitcoin is losing the 106,500 level, headed back down to retest the 106,500 level that it reacted off of the last time it sold away from the reactionary level. And back up to test the 106,600 level. Bitcoin may be selling away from the 106,600 level again. This time the price action, I don't believe, went above or reached the 106,600 level. So price may be retracing here and showing weakness. And now potentially headed back down to retest the 106,500 level. This 106,550 level has been showing price consolidating around that level, and that's also, I believe, the level that participated in sending the price back up to a near test of the 106,600 level. But we can see it here consolidating in between 106,400 and 106,540 and 106,560. Now retracing and potentially back to test that 106.6, but it seems like there's weakness in Bitcoin that won't allow it to get back to that 106.6 level, at least at the present moment. That could change rather quickly, but right now it seems to price seems to be having a reaction at the 106.6 level now, or below the 106.6 level, since price action has not been able to reach it. And now we're back to test it, 5927. Again, with this amount of displacement here this morning, this type of pullback at a minimum would be anticipated. So for me, price action is still looking healthy to the short side. but that can all depend on your positioning in Bitcoin if you are in a position. If you're not, then it's great. Like for me, from an intraday perspective, I haven't received a trade entry signal intraday, so no position for me in that way. The short-term position that I have on is in the green, slightly in the green. It's a small position, so I'm not really concerned about that position, but I can likely say that because the position is slightly green, and price action is currently trading in my direction. So with all that in mind, it could be very easily psychologically for me to feel this way. But just recognizing if my longer term trade position, or I won't even call it a longer term, let's say my position on the daily chart, if it were negative, then I'm pretty sure I would feel a bit different. Yeah, definitely. But that is not the case, and I'm not one that's big on manufacturing problems when they aren't there. I find there are enough problems without having to manufacture them. It doesn't always stop me from manufacturing problems in my life, but it's helpful not to assist the process any further than necessary. And now we're in a new 15-minute candle, still here at this 106,600 level, so just below this reactionary level in price, or right at it, or price action trading below it, but very near to it, and still trading in and around this 106,600 level. As much as I would like price action to just sell away and do all of these things and get right to my targets and this and that, this is just a normal part of trading and price action. And I found from a trading account and psychological account perspective, it is 1,000 times greater to use your system and let your system work for you. If you don't, or I'd say first and foremost, having a system that is more probable for success than not, as in there are no systems that are 100%. But if you have a system that allows you to, or you have a system that, based on your risk to reward and your win-loss probabilities, allow you to make money, then that's fine. For example, someone could have a 40% win rate, but have a 3-to-1 risk to reward ratio, and they would be very profitable. So just understanding that you don't need an 80% win rate in order to be profitable. It's more about following your rules and managing your risk, which would be following your rules. Personally, over trading is likely my current biggest issue. So right now, I only have one rule, which is one trade per trading session. So if something sets up during the London session, I get one trade opportunity. If something sets up during the New York session, I get one trading opportunity. If something sets up during the, I'll just say, I'll call it the crypto session, or so the open of the crypto market. So that's when the daily chart is going to change. So when looking to take a short-term position in the market, needing that needing that area or that time area to take the trade. So basically having 3 sessions during the day where I'm allowed to take only one position. So taking the sniper type approach of the one shot, one kill approach. So just trying to do better with less, or do more with less. I found the more I trade, the more money I lose. And from what I hear from other traders, the same thing occurs. Somebody can take a few trades, maybe be green a little bit, or maybe have a really good day. But instead of walking away, they look for the next trading opportunity and give those gains back to the market. So let's say from a risk reward ratio perspective, let's say you take a 3-to-1 risk to reward trade and it's a winner. So now you're up 3R, or 3 risk units. So instead of stopping there, you continue to trade, and then eventually, let's say you make another trade and it's a winner. You're up 6R, 6 risk units. You're up. Then you take a third trade, you lose that. Now you chase another trade. Now you chase another trade, and then you lose 3 trades in a row. Yeah, I mean, you could give back. Let's say you were disciplined in those next 3 trades, which is, at least in my experience, is unlikely. After you lose the first, or you won the first 2, then you lost 2. That second loss is likely going to create some problems. But you've given back one of your wins if you're respecting your risk to reward ratio. Or at least you've given back a third of your profits. In that case, some people may stop, and then you feel uncomfortable because you've given back money when you could have walked away with more. Also, potentially you could revenge trade to try to get that back. Many things can happen. I found myself what appears to be out of nowhere trading outside of, let's say, high volume market hours, or trading in low volume market hours, trading on the weekends, doing all sorts of stuff. Over trading, or I think my biggest issue with over trading is trying to make money. So right now, focused on making 1 trade per session and not focused on the money. There's a trader that I know that's been doing experiments with simulated trades or paper trades, and just taking 1 trade a day, just choosing a direction. But just that 1 trade a day, when it comes to risk management, from my observations, has been very influential, or at least in my trading, simply because seeing the compounding effect of wins minus the compounding effect of losses. So when you're over leveraged, over trading, all of these over concepts, over leveraging is also an issue. But I find that over leveraging comes into place while I'm over trading. So it's like everything goes over. I hit the over button, or going overboard. So just recognizing that if I limit myself to the number of trades and to when I can trade, and actually follow that criteria. Interested to see what the numbers will look like at the end of the week and at the end of the month. But we'll see how that goes. I find when I am in situations where I do not get to trade enough. I believe there was a week where I believe maybe my first trade came on a Thursday, and I didn't take profits. And then Friday came around, and or let's see, I had a trade the previous week on a Friday, and mismanaged it, as in I didn't know where to take profits. And then no trading opportunity Monday, none on Tuesday, none on Wednesday. And I waited that whole time, following my rules, doing all of that stuff. And then Thursday comes around, same thing as the previous Friday, in a winning position, not knowing when to take profits, and then only trying to enter and exit in one position. So the previous Friday and then that Thursday, all were like 3-1. If I would have exited, would have been 2-1s or 3-1s, but didn't exit and wound up being full losses. So after psychologically having 2 trades in the span of a week and having them both be valid winners that I allowed to return to a full loss, so I'd say with the trade mismanagement of the potential winners, and then the lack of opportunities based on my system, or my system as it was then, those two things coupled together just created a bad situation to where I did some real damage to my account and to my psychology over the course of that the next day, which was Friday, and carried over into the weekend, both I believe Saturday and Sunday. So yeah, when it comes to your psychology, if your system is not sound, I don't know how it will be possible for your psychology to be sound. If you don't have a system that allows you to participate in the market with a reasonable probability of being successful, let's say maybe at least half of the time, it can cause some psychological issues to where you are frustrated because you're going to make errors as a trader. You're human. But having a system that backs you up in a way where you can make mistakes, and the probabilities are gonna work themselves out in your favor regardless, as long as you don't do anything. If you're not making the same mistakes consistently or making major errors, like, your system is going to protect you. So right now, I feel like my system has the probabilities that would be helpful for my account and for my psychology. So focusing on the one shot, one kill approach to every session, and that's if an opportunity presents itself. Right here in London, I'll trade London for another hour, but with the size of this range and the price action, and here pulling back here to this, so we cleared this reactionary level, but now have bought back into it, and now retesting the level above it. Ideally, this level will hold, and selling will take place back into this area. But it may happen, if it does happen, it may happen outside of my trading window. And that's another thing, trying to trading full time, managing your schedule. So if you have other work, then obviously you have to trade around that work. If trading is your work, just like I mentioned, over trading or over leveraging, you can over or you can spend time over in your seat or at your trading station, as in you can be spending too much time looking at charts or too much time trading. So that's another thing, trying to have set hours or set windows of operation, and then only operating in those windows. So understanding that you will at times miss some opportunities, but you put yourself in the correct place at the correct time with the highest probabilities of success. So sitting for the Frankfurt Open in the first 2 hours of London, based on my back testing, probably 90% or more of any trading opportunities occurred within that window. Maybe over the last 2 weeks, maybe one, maybe two out of, let's say, out of the London Frankfurt session. I think out of the last 2 weeks, there have been at least seven opportunities within my window. So let's say out of 10 days, there were 7 days that there were trading opportunities within the window. And then the 3 days that there were no trading opportunities, I think 2 days there was nothing. And 1 day there was an opportunity, but it came, I think, 4 hours, 3.5 to 4 hours into the London session. So based on what I'm seeing here, or based on what I have observed from back testing, this is going to be the ideal window to trade in, at least for my system and my style of trading. And now the first hour has been put in London. This pullback is starting to show signs of retracement back to the short side. This new candle that has opened up has shown some weakness, but there is yet to be continuation in that price action. The previous candle came back to test this reactionary level here. So now this candle that we're currently in has come down to test this reactionary level here that has served as the main, let's say, barrier for price action to reach down into this range here. And now price action back down to testing that reactionary level. As much as I would like to, let's say, give 4 hours to every trading session, putting in 8-hour days, trading isn't necessarily the type of profession where I think most people set out to take on and then spend their life staring at charts. It may seem exciting early on and may seem exciting throughout your career. I'm a few years in and just as excited, or I feel like I'm just as excited as I used to be. Um, but at the same time, recognizing that it's not the amount of hours that's spent trading that I would say is as important as uh, the quality of the hours. And then that likely goes for most anything in life, where quality supersedes quantity, if you are that type of person. Quantity of trading activity to me is less important than quality. So trying to take the same approach with the time I spend at my station trading. So trying to do my best to make sure that it's not quantity, that I'm spending a lot of time. It doesn't take a lot of time, even though crypto market is open 24/7. You can have your platform open 24/7 and, excuse me, check in on it 24/7 and trade all hours of the day and night. I've done that. If it worked, I'd still be doing it. Quality, choosing my trading windows or my kill zones, and executing in those ranges. No different than I trade ranges in my system, placing ranges on my time or on my trading times, or same thing on my position sizing. I mean, setting boundaries or ranges or barriers to where, okay, this is what it is, and that's just it. So like in the past, ending a session at a certain time would be difficult, because I'm always thinking, oh, well, what if something sets up right when I walk away, or what if this, or if I would have just waited another half an hour, this was here. But to me, that's just chasing after, let's say, lower probability situations. Of course, some things are going to happen outside the scope of what you frame, because the market does what it does when it does it, not when I dictate it or when I show up or when I planned it. So just recognizing that certain times of the day, certain things are more probable than other things, and just being present for those things allows you to be able to take advantage of them, and the things that you're not present for, you don't participate in those, and that's okay. There's enough activity and enough things to participate in that you can be satisfied. I would say, if I had the option of only trading one day a week, and I was sustainably profitable, or being able to trade every day of the week, and being less than sustainably profitable but still profitable, I would take my one trade a week, because to me, there's a difference between trading for the sake of trading. If you like trading, then trade away. If your objective is to grow your account at a minimum, or at a maximum, being able to trade for a living and support your lifestyle that way, and yeah, it's a bit of a different, it would be a different approach than just say for the love of being able to trade. You start getting into the business of trading, which is much different than the, let's say, the hobby or the interest or the, let's say, excitement of trading. Some people will say good trading is boring. I would agree. Good trading does have its moments, but overall, it's much like watching this London Open. 80% of the time, it's like watching paint dry. but the other 20% of the time is well worth the wait from the other 80%. It just seems to go by much quicker. But as soon as that 20% happens, you forget all of the 80%. If this price action were to break structure and provide an entry signal for me within the next 50 minutes, I'd be ecstatic. But if it doesn't, I'll, I'll save my ammo and wait for the New York session. So selling here and back at retesting this reactionary level. And potentially going down to test the 106 600 level. So far gotten as low as 106 612. The low of the previous candle being 106 584. So if the 106 584 level can be breached, then there is a higher probability than not that there would be continuation to the sell side. Right now, this candle is currently trading inside the highs, or inside the high and low of the previous candle. So based on my experience, the probabilities of Bitcoin trading higher or lower would start, or I would start to evaluate that based on does price break out above or below the previous candle. And price still resting here. Still trading in between these two reactionary levels. Seeing some reactions here. Another retest. And now testing the high of the candle and the rejection. further consolidation. And since that test of the high, there's been a reaction off of that, and selling has been pretty consistent since then, starting to get some retracement now. And new 15-minute candle. The way that candle set up here on the 15-minute, this does not look or this looks like a weak formation here to me. Seeing this price action here. Also what I'm seeing, like this type of candle, I think some people may refer to it as like a hanging man type of candle. But what I'm also seeing here is a swing high at a level. So this is what I this is what I would look for if there were a break of structure or a market structure shift. Here we have a high with a lower high to the left and a lower high to the right. We've got this wick here and this hanging man type of pattern here. So to me, this would indicate potential weakness in the currency pair. But we'll watch and see how price action plays out. You can see the last three candles have mostly just been in this area here. So we'll see if there's if price action can break away from this consolidation area. Wait a second. I am reading my chart wrong. Here, there's a market structure shift here to here. There was just a break of structure. This just set up here. So this is my short actually. Where is my liquidity that I'm targeting? Is here. I almost missed that. 106.068. So I'm going to be late for this entry here because this was actually my entry there. 106.7751. Okay, I missed my entry. I don't know if we're going to get any more pullback. Now I'm just waiting to see if we get pullback or if we're going to get continuation here. Okay, we're getting some pullback. I'll take it here. Of course, I take it right when it pulls back just a little bit more. But that's cool. This is my actual entry. And I'll walk you through what I'm seeing here. Even though my entry was actually here at the high, 106.6999 would have been my desired entry here. So what I'm looking for, or the mistake I made, was I did not adjust my structural range. Actually, where's my other line here? This needs to be here. Okay. What I failed to do was when this high came in here, this structure was broken, but I did not register that breaking structure. But then when I saw that, when I saw my setup happening, I'm like, my setup's happening. That's crazy. Even though there's been no changes in market structure, but there was. So this range comes in here, and then this sets a high here. This is the strong low. This is the weak high. And then we get this break here. And then I want to see a swing high at a reaction level, which we're getting here. So yeah, I'm thinking things are slow and not happening, and they're happening for me. All right. So late on this position, but in this position. So one of the things that I've noticed about trading is it's very difficult to be like perfect. Even though this does annoy me because there was a better entry if I were aware, if I were better structurally aware. Also, when I took the entry, I did wait for some pullback, but of course, as soon as I entered, it pulls back even more. So lots of things psychologically that could be frustrating or could be focused on from this situation. But what I want to take away is I found it. It's there. So far, it's valid. It's working out. So I could get frustrated with the fact that I didn't nail this and do that, or can just be focused on the fact that no trading day is going to be perfect, and that if I am able to take advantage of trading opportunities, then take them as I can. So I mean, this may be a difference of a few dollars or something like that. But what would be more devastating from a psychological perspective would be to realize later today that I was just sitting here and missed an opportunity. And now we're back at the 106,600 level, testing it. And sold through 106,600, now at 106,591. Retracing back into the 106,600 level at 106,6212. It's interesting how when you are looking for a trade, you see it everywhere. When you are trying to let a trade set up, if you're not careful, it could set up without you. But I do need to be more aware of when, let's say, reversals come and change structure. What to me looks like internal structure is the actual structure. So, yeah, missed that, but caught that. Which also means I need to, that was the range. Now the range is here. And here. Now if this sells off and breaks this, gives me a break of structure here, then I'll move the low down or move the strong high to here. So I'll just do a rundown of the structure. So this was a strong high, this was a weak low, this was a strong high, this was a weak low. Then price action comes in and puts this level in here, this retracement level. Price action sells off, and then in this candle here, you get the market structure shift here. You get the market structure shift here from this level, and this puts price action into an uptrend here, with this being the strong low and this being the weak high. And then with this price action here that's been selling off during Frankfurt and London, we get the market structure shift here. And then that creates this strong high here and this weak low here. And now based on price action, if there's continuation here, then there would be a break of structure down here, and then that would convert. This would be the new strong high, and then whatever level it put down here would be the weak low. Now we're getting pullback, and the candle just put in new highs. So the previous high was 699 or 6999. Looks like I might get stopped out here. What's the high? 106.7449. And stopped out. Alright, that's it for the London session. Alright, that's it for the London session. The long-term trade is still on, so we'll see how that goes. But for intraday, this fulfills my one shot, one kill rule for this session. So now I'll just be looking for any potential trade opportunities during the New York session. But I did see what I wanted to see here. Break of, or a market structure shift, price action to set up a swing, or in this case I'd be looking for a swing high, which is put in here, and then as you can see, price action went into the trade direction and then reversed, and then came back and stopped me out here, and now it may put in the it may put in the swing high and sell off as I had anticipated, which I do kind of want to sit here and do, but in reality, I know the best thing for me to do is to walk away and save some ammo for the New York session. So instead of breaking my rule here on the very first day, it may be best to sit this out. I did consider allowing myself to take 2 trades per session, but that also allows me to take 2 losses per session, and that may be more than I want to take, just because if I take 2 losses in one session and then let's say trade the next session and take a loss in that, that's 3 trades down on the day, and then possibly the same thing on the next day, or at least the next session. So like taking 2 trades. All right, now I'm already down 4 trades intraday. So not exactly what I'm going for. But I also do understand that price action can set up in a way where you're enticed to do certain things. Like right now, really enticed to sit this out to see if I just got faked out before this move, and I feel like I did, but I could be dead wrong in setting myself up for another loss. Out of back testing, I found that only 1 position failed out of like 17 positions. But the one that actually failed actually set back up like right after. It threw in another wick. Basically, the position that stopped me out was the position that actually set up the actual trade, which I feel like is what I'm looking at here. Which I could be wrong, but it's like setting up a system. You don't really know what is the best thing to do or not to do. Like right now, I feel like, okay, that feels like a setup. I could be very wrong. Also, you can see that this candle is an engulfing candle here. This may be me trying to talk myself into trading here. But this candle, the high and the low are above here. Also, I'm not seeing a level where this price action is getting, like, I don't see a reactionary level where it's setting up like a swing. Like, to me, this is showing strength, like it wants to be strong, it's moving up, but I think I got faked out. Right now I'm debating on whether or not I trade this in simulator or actually like take 2 trades if one fails. My apologies for blowing into the mic. I mean, this is very early in the candle. This candle has quite a bit of time left to go before it closes. I would not take a position until this candle closes. And then if you're looking at the price action right here, you can see it's showing weakness. So I think I just got faked out. Which is fine. Now it's just a matter of do I follow my rule or do I break my rule? Following my rule would be great. Breaking my rule could be detrimental. Could be great in the short term, but overall would likely not be the best thing. But that could depend on whether or not this system takes fake outs or not. For example, yesterday I took a tiny position here outside of the trade window, but you can see here, or there's a break of structure here and goes up to here. So this was the structure here. I took the short position here, and then you can see this consolidation. I got tested. You can see the same thing, like you see this candle here is just like that there. But then this candle comes in. This candle comes in here, sweeps this out, and then does this. So looking at this, seeing this, it's like, am I looking at the same thing more or less, where you get faked out? Like this move here, to me, looks a lot like this move here. But again, the fake out and then the drop after it sets up, and I'm wondering, is that the same thing here? Where it sets up, you get the fake drop, you get stopped out, and then the trade happens. As you can see, we're selling below this 600 level now, sold below this level here. I think it's a fake out like yesterday, and maybe my new rule idea is maybe it's not valid. Maybe, for example, I'm trying to reduce the number of trades that I take. It's like, okay, once you take one, you can stop, but if you take two, okay, what are you doing? But then at the same time, there's the concept of, okay, if I see my setup, I take it. If I don't see my setup, I don't take it. So it's like, okay, if that's the rule, my setup is right here. I take it. It fails. Okay, my setup now potentially is right here. If I see it, I take it. So to me, there's a difference between the two things. One is, hey, I'm just trading. I don't have a plan. I don't have a system. I'm just trading. That's one thing. Another thing is, when I see my setup, I take it. Another thing is, I'm only trading one time and that's it. So I'm considering whether or not it's more appropriate to just, when I see my setup, to just trade it. That may be the better approach. That's what I'm leaning towards doing now. Even though I could walk away and just allow this trade to do whatever it's going to do. to me, this is still setting up, even though the risk to reward is not as good as it was before. But I think this is good to go now. It is certainly not going to offer the same risk to reward. It actually may not give me a risk to reward. The way that it's selling off here, I wouldn't get an opportunity to get back in unless it pulled back quite a bit in this candle or in the next, because my stop would need to be back here based on my rules. And I would need at least a 1-to-1 to target. Let's see what we're looking like here. Stop loss 106.7796. So 10 cents above the candle here. 106.068. Okay, so we're showing a better than 1-to-1 here. Yeah, not a very attractive trade here. And now it comes down to targeting, because this looks like it is ready to break structure here. And then with this fake out, my target was way off. So I may need to adjust my target with this fake out. 68, what is this? 068. So to trade this, I may have to find the next target area, which would be here, 105.622. I think this is what I'll do, because this is my setup. If this turns around, then this is just crazy. Yeah, but based off of what I saw yesterday up here in this area here, this is doing some similar stuff here. So I want to test it out. 105.622. What is this? Okay. Have a look at the 60-minute here. And that's the thing, it's like when these fake outs come, or at least from what I saw, it's like they come when the trade is bigger, so it spits you out. and I've heard other traders talk about this, like you get, like that's a good sign, like if liquidity is swept out before a trade takes place, which is what just happened there. Liquidity being swept out, and now we're seeing quite the move down here. Yeah, even though this is good, really good for my longer term trade, this has me a bit perplexed here in the short term, but I'm gonna take this. Yeah, I'm gonna take this trade. So already breaking my rule, even though I don't know if it's a valid rule or not. And we're going to target some liquidity a bit deeper. So we'll target liquidity here. And pull back immediately, of course. I personally don't wait. Don't wait for pullback or anything when I take a position, even though pullback is quite common. But I just don't know how far anything will pull back, or if anything will pull back at all. So for me, just from a psychological perspective, it's just easier for me to have a standard entry of where I would want to get into a position or get out of a position, just having certain standards in place. So with that in mind, or like just being systematic, like not having to think or plan or this or that, just already knowing, hey, this is what I intend to do, and then just doing that. And you can see here this pulling back into this price area here, or if this sets up as potentially like something like an order block, let's say, it tapping back into it here before selling off again. This actually makes me want to add with it coming back like a 50% type of trade and then tapping back into this. If it sells below this, I'm really gonna like it, and I'm gonna want to add, even though it's not a good idea necessarily, but I'm gonna wanna. Oh, 6068. Let's see what the $106.7796. Still not enough for 105.622. $5,258. So if price sells back into this 8, 2, 1, 5. Let's see what we have here. All right, I'm getting a bit aggressive here, but I do like what I'm seeing, and I want to see if this plays out. I recognize that at times, like before I have fully vetted something, I like to really box myself in. And much like the situation that I explained earlier when I found myself like not taking profits, um, and like being frustrated, trading over the weekend, like doing all of these things. Um, a lot of it comes with like not taking advantage of opportunities when they present themselves, like taking profits and things like that. Um, Also, if your system is not the best, no matter what you do, excuse me, the outcome will also not be the best. So just recognizing that my system is different, it has a much higher probability. Um, so trusting what I'm seeing or what I'm experiencing, reacting to what I'm seeing and experiencing, and then just allowing the outcome to play out. Um, so part of that is, let's say if you have a system and it is not the best system, it is going to hurt your trading account financially, and it is also going to hurt your mental account and emotional account, by affecting your level of confidence, your ability to be able to do things when you need to do them. So, for example, if you're losing a lot of trades, you're going to be very hesitant to take a trade. If you are adding to positions and ads don't work, you just wound up losing more money than you would have lost if you had just taken one position. You are going to be hesitant to add. All of these things come into play when you break your rules, like what I'm doing now. But my rules are in place not because my experience tells me that this is okay and this is not okay. Right now, my rules are in place because I don't know what's I don't know what's going to happen based on this system. So I just lock myself in as tight as I can, and then allow the breathing room, excuse me, to come into play as it reveals itself. So based on what I've seen over the last couple of days, and then from what I've seen over back testing the last couple of weeks, there's some validity to what I'm doing now, but it is rather aggressive. But not aggressive to the point where I feel like I can't walk away from this trade, or I can't walk away from my station. If it was so aggressive that I felt like I couldn't walk away from my station, then I know I'm just doing too much. But right now, this is certainly aggressive. It could come back and bite me, but I do feel like there's something here, but I could be completely wrong and immediately find myself going back to one trade per session. But I found that the best way to learn is through experience. So this currency pair is really doing a number this morning. And we'll see if it does a number on me. But I did have to wade through some drawdown and some, let's say, uncomfortable price action after entering this position, getting stopped out here, and now dealing with the price action that's in this current position. So if trading were easy, everyone would be doing it, but it is not. So we'll see what I have gotten myself into this morning. But doing my best trying to stay focused and not allowing the previous trade to impact what I'm doing, more so than trading what I'm seeing. So some people, or at least I know I have been in the habit of revenge trading. And so when I see a setup to me, that's me trading my setup. It's not revenge. And then if a setup happens right after I get stopped out of a trade, again, it's not revenge. This is my setup. So this isn't me trying to validate or justify what I'm doing here to anyone listening. This is just my mental process of what am I doing? How am I doing it? Why am I doing it? All of these things, and I just find that it helps to talk through it. Also, I do go back and watch some of my footage to actually learn from myself. Like, okay, what was I doing? What was I not doing? What was the market doing? What was the market not doing? Things of this nature, just to check in with myself, to validate what I was experiencing, to review. There have been times where I've gone back over videos and picked up things that I had forgotten that were helpful. So many things that come into this. And as you can see, this price action is starting to pick up in volatility here in both directions. So as we're testing this week low, getting volatility coming in here. So we may be headed for a potential break of structure here, or a reversal. My trade right now is based on a potential break of structure here. And getting quite a bit of consolidation here in this candle. Less than 4 minutes to go in this 15-minute candle. Still getting consolidation here. And we're seeing the volume profile increasing here. As Bitcoin is trying to find a direction here early in the London session. Lots of consolidation in this candle and retracement. And you can see this slight test of this reactionary level here. Whoa. Slight test of the reactionary level right here. Seems like my drawing pen got as volatile as the price action right now. Less than 3 minutes to go in this candle. Just the solid body nature of this candle looks quite institutional here, with all body and just the tiniest wick at the top, no wick at the bottom here. What got off to the appearance of a rather slow start has definitely picked up. As I mentioned, that 80% of dry time or watching the paint dry, that 20% certainly erases that. I don't remember much of suffering through this area here at this time. Still getting consolidation in this candle. I'm starting to sell a little bit here coming into the close of this candle. Less than 1 minute until the close of this candle. So this candle here could potentially be seen as a bearish order block, with it being validated here in this candle with price going below. Price wouldn't have to close, but it is good if it does. And then seeing the retracement tap back into the order block here, tap back into this level of resistance here. To me, these are all signs and symptoms of possible institutional sponsorship here. But we'll need for price action to confirm all of these signs and symptoms. I could be reading this completely wrong, and this could be something else happening here. As you can see, Bitcoin is having a reaction here at this level of around about the average of where I entered, and is showing some strength in this candle. So right here, it may be up for a retest of this reactionary level that's above. This previous candle failed to reach that level. Or it could be the algorithm could be trying to entice buyers for another leg lower. As you can see, it's currently trading inside the range of the previous candle. So until it makes a decision on what to do, it could be difficult to say. Also, even if it does break out to the long or short side, it could still engulf the previous candle at any time. Still getting consolidation in this 15-minute candle, even though right now it seems to be predominantly selling. My first entry is at 434, so we'll see if if price can trade below that level, because that's going to be at or near the low of this candle. Yeah, 434.5, and I entered at 434.5. It's interesting, like when I enter on the following candle after I see my swing, this is the first time I have ever gotten the entry being the same price as the opening price. Typically, I get an entry and it's at a worse price, as in by the time I enter, this is already doing this. So I enter and get a worse feel, and then it pulls back. It's typically what I run into, where in this instance, getting the perfect feel, and then it going back. I can say consistently, when I enter a position, it is going to go against me, no matter what I do. It's just a matter of whether or not it continues going against me or not. And also looking at this situation where the price action is consolidating the way that it is for the potential of a larger trade. For example, this area here consolidating for a while before this price action. This area consolidating for a while before this price action. So considering this area consolidating for a while, potentially for a deeper sell here. But this is pulling back a lot longer and a lot deeper than I would have anticipated. But that is always the case. I'm always anticipating as soon as I get in something, it is so ready to go. But that is rarely ever the case. And buying here, and we're getting consolidation. Still trading inside the range of the previous candle. This breakdown, if it does happen, may take some time. Also, this reversal, if it does happen, may take some time. So I'm going to let this work itself out. Typically what may happen is if I walk away, something will happen. So if earlier I had decided to walk away, I would have missed my setup entirely twice. And now if I walk away, maybe this break of structure will take place and price action will move towards my target. Not that me walking away or me entering a trade has anything to do with price action whatsoever. But I'm going to take a break here before the New York Open. And I'll be back for that. But this is On Tilt Trading with today's live trading Bitcoin during the London session. We'll see you next time.